Hello and welcome back to another video. Today we're talking all about buy-to-let mortgages and what you should never do when it comes to obtaining a buy-to-let mortgage. Now make sure you stay tuned to the very end of this video because I'm going to be giving you at least 10 things never to do and not to do when getting a buy-to-let mortgage. For those of you that don't know me, my name is Marco. I'm a property investor, developer and mentor, and I am extremely passionate about helping people invest in property. Now I have many mortgages, I've gone through the process countless times, and yes, I'm no mortgage broker, but I know a lot about mortgages, especially from a property investor point of view. So I'm going to be sharing my knowledge that I've learned throughout the years of investing in property with you today. And this is really relevant for anyone thinking of investing in property, and that's specifically really buy-to-let property and purchasing with a mortgage. So the first tip, and it's quite an obvious one, is don't go shopping and don't go on viewings for properties until you've spoken to a mortgage broker. Because first of all, by speaking to him or her, you'll have a good understanding if you can even obtain a mortgage. Most people can, and I'm sure you hopefully won't have an issue with that. But also we need to talk about the numbers. You know, how much can you borrow and what's that going to cost you? Because you need to know that before you're even viewing a property, because you need to know how much you can offer on a property. And there's no point viewing a property if you're miles apart and you can never make the math work. It's a complete waste of time. So always speak to a mortgage broker first before you attempt to view any property. And if you're looking to speak with a mortgage broker, again, head to my website, ms7.uk, click on use our suppliers and tick the box that says mortgage broker, and I will personally introduce you to my mortgage broker who I know, like, use and trust. Number two, learn from my mistake here. Do not go direct to your bank. For the first ever property I purchased, I went to the bank to obtain a mortgage. Now here's why you should never do this. The odds of the bank offering you the best possible mortgage product out there amongst the thousands of mortgages is very slim. So yes, I went to my bank, they charged me a really high rate. I didn't know it at the time, I just thought that's what people do, they go to the bank to get a mortgage. However, don't make the same mistake that I did. Again, speak to a mortgage broker. The reason why you need to speak to a mortgage broker, and this is a whole of market mortgage broker that can literally, as the name suggests, scour the whole of the market, is they can look at the thousands of offerings out there and get the very best deal for you. So the third thing never to do when obtaining a mortgage, and especially a buy-to-let mortgage, is borrow too much money. There are some lenders out there that will lend you more than traditional. Maybe they'll lend you 85% of the property so you can put less of your own cash in to make this deal happen. But try not to do this. The reason why I say this is twofold. First of all, because there are less lenders doing this, it's seen as a premium, and lenders will charge a premium, a high rate for this privilege. So what this means is you're going to be paying a higher mortgage cost. Now the second reason why I say not to do this is it doesn't take property prices to fall that much for all of a sudden you would then have to put in your own money to make a remortgage or to make a sale actually happen. So for me, I'd say don't get a mortgage more than 75% loan to value. Now loan to value is the amount of money you're asking for, the loan or the mortgage, over the value of the property. So don't go above that 75%, because if you do, you're going to be paying a higher rate of interest and opening yourself up to higher risk. The fourth tip I've got for you is don't fix for 2 years if you're looking to hold for the long term and you haven't added significant equity. Well, what on earth do you mean here, Marco? Well, let me backtrack slightly. In the UK, you normally have two main options. So if you're fixing your mortgage, you can normally fix for 2 or for 5. Now, yes, there are other options, but they are the main two. So you fix your mortgage for 2 years at the same rate of interest, or you can fix your mortgage for 5 years at the same rate of interest. And once those 2 or 5 years is finished, you then have to find a new deal. Now, the reason why I say don't fix for 2 years if you haven't added any equity or added any value to the property. So after 2 years, you're going to have to find a new mortgage. Now for buy-to-let mortgages, there are fees involved. So you're going to have to pay your mortgage broker a fee. You're probably going to have to pay a product fee to take out the new mortgage, which is normally a percentage of the mortgage. Again, you may have to pay any legal fees, maybe the lender's legal fees or your own legal fees for that new mortgage. But also it's hassle, time and energy to remortgage. It just takes a lot of your time, even if you are using a mortgage broker, to push a refinance through or a remortgage through. Refinance, remortgage are the same terms. It's just when we're moving from one mortgage to another mortgage. So consider fixing for 5 years instead, especially if you haven't added any value through renovation and you're not looking to take equity out the property. So if you are looking to hold your property for long term, I would recommend fixing for 5 years. So the fifth thing not to do with buy-to-let mortgage is to be spontaneous. That's the worst possible thing you can do when investing in anything whatsoever. Do not be spontaneous. And what I mean here is don't all of a sudden wake up one day and think, right, I'm going to sell the property or I'm going to remortgage to something. So for example, let's say we're on a fixed 5-year mortgage. Let's say we're halfway through the mortgage, we're on year 2 or year 3, something like that. And all of a sudden you decided that you want to sell. You're going to have to what's called pay early repayment charges. These are charges you pay to the lender to exit that mortgage early. So don't be spontaneous. Let's plan ahead. Let's plan sales, let's plan refinances, and let's try and avoid these early repayment charges. You don't have to pay these early repayment charges providing you see your mortgage out for its full fixed term. So the sixth thing not to do is buy a buy-to-let property with a mortgage and be buying this with a very small margin of safety, or even worse, no buffer. But what I mean is buying a property that maybe gives you a low cash flow, because if it gives you a low cash flow, once you've got your rent in, you've paid your mortgage, you've paid your other costs, and it only gives you a small figure, something that maybe you're not too happy with, well, let's fast forward 2 or 5 years. Maybe it comes to remortgaging because your fixed term mortgage has expired. Let's just assume the example that interest rates have increased, which they have, in the past 2 years of me publishing this video, then all of a sudden your monthly mortgage cost is going to be higher. But what happens here, if your monthly mortgage cost is higher, that means your profitability is reduced. So that figure you weren't too sure with in the first instance when you purchased the property, well, you're certainly not going to be happy with it now because it's going to be much, much smaller. So always buy with a nice large margin of safety, so if things do go wrong or if mortgage costs increase, you're still making an amount of money that you are happy with. So number 7 is don't mortgage and buy property in the wrong entity. And there are 2 main ways to buying property: personal name or through a limited company. And I've got a really good video that explains the advantages to each. I'll link to this in the description. Here's a picture of the thumbnail. But the reason why I say is don't buy a property and then get a mortgage on it in the wrong entity is it could cost you more in tax. So this is a really good opportunity for you to speak with a tax specialist, speak to a property accountant, and hopefully they'll be able to best advise you on whether to buy within a personal name or a limited company. Now, it's important to note that if you're getting a buy-to-let mortgage and you're buying in a personal name, this will cost you slightly less. But don't be fooled by this. For the majority of investors, this will cost you more, and it will cost you more in tax. So don't be lured in by the lower rates of interest for those purchasing within a personal name. You will probably pay more tax overall, especially if you're a higher rate taxpayer and you've got significant property. I can't quite remember what number we're on now, but the next thing not to do when buying a property with a buy-to-let mortgage is to let that property out to the wrong tenant type, to the tenant type that your mortgage lender is not happy with. Now, what I mean here is when you get your mortgage, there'll be certain terms and conditions of the mortgage, and they'll say what tenant types you are allowed to let your property to. So for example, you have mortgages for HMOs, for houses of multiple occupation, where you have 3 or more unrelated people living in the same dwelling. Now, what you can't do is buy a property on a single buy-to-let property and then maybe rent that property out to 5 people, because you'll probably see in the terms of that mortgage that you're not allowed to use this for a HMO purpose. So again, it's really important to let the property out to the correct tenant type and to adhere to the terms and conditions of your mortgage. So I've got 2 more really important tips for you before we conclude the video. The penultimate tip is do not expect your mortgage broker to work for free. I've come across investors that don't like to pay mortgage brokers fees because they say, right, well, the mortgage broker will get commission from the lender, therefore I don't want to pay him or her a fee. Now, in my opinion, that is wrong because, first of all, there's no guarantee that that mortgage broker is going to be able to obtain you a mortgage, and that's not their fault. And that also, second of all, they have to put in significant amount of time even just to get to the application stage. They have to understand you, do a thorough fact find the best deal on the market, submit the application, and manage the application all the way through to that mortgage completing. So I pay my mortgage broker a fee, and I seriously think that most people underestimate the value that mortgage brokers bring to us as property investors. So pay your mortgage broker fairly for the work that he or she is doing for you. Now, the last really important tip I've got, and this is aimed really at current landlords who have buy-to-let property and mortgaged buy-to-let property, but it's really important still for those investors that are thinking to get into property, which is once you have a mortgage, a fixed term mortgage, and you're reaching the end of that mortgage, let's say you're at the last 3 or 4 weeks, don't all of a sudden rush to your mortgage broker and try and get an application in so that you don't then move on to the really really expensive standard variable rate. So what happens for those who are not aware? Once your fixed term, it could be a 2 or 5 years, however many years you're opted for, expires, you then reverse onto the lender's standard variable rate, which is typically a very expensive short-term rate. So we don't want to get to that point in time. We want to plan this remortgage at least 6 months ahead. Give yourself ample room and sufficient space to get this remortgage application submitted. So you want to be approaching your mortgage broker 6 months before the expiry of your fixed term. That will give your mortgage broker sufficient time to scour the market, find the best possible deal, and lock in a great rate. Now here's the thing, if interest rates do fall and do drop within those 6 months, your mortgage broker can go back to that lender and say, right, we'd like the lower rate, please. So don't feel that you've locked in a high rate and you have to stick to that. However, you can use the reverse to your advantage. Let's say we've got an application in at a certain rate, but a few months down the line, interest rates have increased. Well, all of a sudden you can lock in that lower rate from 2 months ago and use that for your remortgage. So don't wait to the last minute when it comes to remortgaging. Have a conversation with your mortgage broker at least 6 months prior to the fixed term expiring. So let's summarize the tips and tricks that I've given you today. Now, I'm just going to look to my laptop because there's no way I can remember all of them off by heart. Number 1 is don't go shopping and don't view property until you've spoken with a mortgage broker to get a good understanding of the figures. Number 2 is don't go to your bank. Don't make my mistake. Go to a whole of market mortgage broker and get the best deal. Number 3, don't borrow too much. I wouldn't borrow more than 75% of the property's value. Number 4, which is don't fix for 2 years if you haven't added any value. Consider fixing for 5 years. Number 5 is don't be spontaneous. Let's plan ahead. We don't want to pay those early repayment charges. So plan ahead when it comes to selling a property. Plan ahead when it comes to remortgaging. Number 6 is don't buy with little buffer. Make sure there's a large margin of safety. Number 7 is don't buy or mortgage a property in the wrong entity. You need to know whether to buy in a personal name or limited company. Number 8, which is don't let your property to the wrong tenant type and make sure you adhere to the mortgage terms and conditions. Number 9, don't expect your mortgage broker to work for free. And the last one, number 10, really important one, is make sure you approach your mortgage broker 6 months before your fixed term expiry so that you can remortgage in a timely manner. So I hope you've got significant value from this video. Now, if you're looking for something a little bit more, I've got a really good video. It's a very good general video on buy-to-let mortgages. It's got lots of incredible comments. It's one of my most viewed videos. Here's a picture of the thumbnail. I'll link to it in the description. Consider watching it to find out a little bit more about buy-to-let property and how to invest in buy-to-let property with a mortgage. It's really made for people new to and beginners to property. Now, if you're looking for a mortgage broker, someone that I know, use myself and trust, head to my website, www.ms7.uk. Click on Use Our Suppliers at the top, tick the box that says mortgage broker, and I will personally introduce you to my mortgage broker. Now, have I missed something here? What else wouldn't you do when it comes to buy-to-let mortgages? Please do comment below. And as you know, I personally respond to all comments submitted on my videos. All the best with your property investing day. Goodbye.